Good morning, everybody. This is John Blank, and I am Zacks Chief Equity Strategist and Economist. And today is Monday, September the 23rd. We've done the first part of Zacks Top Stocks in Computers and Technology, and today we will do the second part. So keep in mind, this is the second part. There is a first part. So disclosures, these are my views. I do have a PhD. They are not necessarily the views of Zacks Investment Research. The rest of this you can read at your leisure. We've already gone through it. Of course, we're going to always start here, folks, on any document that we have in YouTube about stocks. We'll start with stock tickers, company names, and market capitalizations. This time around, we've got three industry codes, 35, 36, and 37. Those will be miscellaneous technology, telco equipment, and telco services. So over here, you can see at the top, 35 is miscellaneous technology, and you're going to see names associated with a lot of back-end chip things like Taiwan Semi, ASML in the Netherlands, Applied Materials, Lam Research, Fujifilm in Japan, and down here, Mettler Toledo, which is an instrument maker, Integris, also a chip company, Bruker, which is another instruments. So that's what's in miscellaneous tech. Keep that in mind. Down here, 36, we've got Arista, Motorola, Ericsson, Nokia. To no surprise, those are telecom equipment providers. And then down here, we've got our listing of the service providers. And of course, American Mobile, the Mexican group for wireless, Verizon, AT&T, all these groups, Orange, which would be a Dutch version of the same thing. So keep this in mind. This is what we're looking at in terms of the last three industries. Over here, there's market capitalization. Here, the Zacks Rank organization of a different set of names. And of course, over here, we got the maximum number of analysts. Pulling names that are actually quite different here than over here. Usually that's not the case this time, but it is the case. I find that interesting. Always interesting to use these three ways to pull stock tickers, and now you can see why I like it, because you can see right here at the summary state what's going on. Now, before we go further into this, because we got all these chip names, we do need to talk about things that were in the supply chain of Infotech, which is the most international supply chain there is, that existed before the CHIPS Act of 2022. So, the CHIPS Act of 2022 aimed to bolster and revitalize the semiconductor industry. So number one, it tried to increase domestic manufacturing. Number two, funded R&D. Number three, it funded workforce development. Number four, national security. Of course, we want these chip companies inside the country. Lessen dependence on foreign manufacturer supply chains due to geopolitical risks right there. We all got enlightened to that during the COVID pandemic. Now we have China and Russia to deal with, and Iran, I suppose. Economic growth, finally, collaboration, promote partnerships between government, industry, and academia. Here's what the CHIPS Act 2022 was supposed to be dealing with. So what happened? How did we get here? Well, we had challenges reopening industries, labor shortages, unpredictable demand, and shipping challenges during the COVID period. We had geopolitical risks. We had trade disputes with China, of course, economic sanctions with Russia, regulatory challenges, so particularly in Europe, limited domestic production. We had disruptions in raw materials. We had logistics and transportation issues at the ports. Overall decline in U.S. manufacturing base, not enough facilities. Then, of course, just the simple fact that we're relying on so much chips. We had a lot of demand, a little bit of supply, and lots of disruption. And that meant ultimately that we were over-dependent on overseas manufacturing and exposed to these natural disasters, of which COVID is one, but also hurricanes, things like that. So this is what happened. Here was our solution to this set of problems. Now, fact check number one I put in here is how much progress has been made in this whole thing. Number one, we've added 115,000 construction jobs and manufacturing jobs. Here we've got a much more robust semiconductor industry ecosystem We got a new Indo-Pacific economic framework. The Quad 4 met with Biden this weekend. American Workforce Hub for National Semiconductors. National Security in the Department of Defense Microelectronics program, of course, now underway. And the Future of Semiconductors Initiative also underway. Public wireless supply chain innovation underway. And here's all the different things that have been funded to date. You can look through all this different things. National Advanced Packaging Manufacturing. We got 12 tech hubs. Private sector investment, $400 billion of investment across the country. That's an incredible number right there. Private sector investment, big number. And all these others are, just insane. Some of them are smaller, some of them are larger. Here's a $39 billion in direct incentives. But just keep in mind, you can come back here to understand what has been transforming this business. It is the government. It is the CHIPS Act of 2022. Now we're 2 years in on this whole thing. All right. So first off, we had the computer office equipment and computer software groups. Here's computer office equipment, and here's computer software services. So what has been happening in this space? You can see we've got all these different types: smart printers, scanners, and copiers, corporate workplaces, eco-friendly supplies. All these things are happening over your computer office equipment. Software services, of course, AI is here, augmented and virtual reality, distributed computing, Web 3.0, which is these AI-driven services, predictive analytics, unparalleled security for blockchain, and app-like experiences. So consider this whole thing, or consider software services right now. Consider this whole thing with office equipment. Okay, now we got electronic semiconductors over here, and we got telecom equipment over here. So now we're getting into this whole part. Again, we're going to get the same types of things, but in a different spread out. Generative AI, hyper quick sales, automating repetitive tasking, content formatting for the semiconductor business, quantum computer, cryptography, material science, complex problem solving, geopolitics. We now get export controls in China. New geographies. We're bolstering demand and chip fabrication capacity in the United States and smart manufacturing. So here's what we're doing in the semiconductor. Telco equipment. 5G, of course. Dense wavelength division multiplexing, DWDM. Fiber to the home deployments. Of course, I'm talking to you on one, FTTH. X-Radio access network. Keep in mind, all these things are what's going on in the background of our industry story today. And finally, we'll get into telco service and electronics industry groups. The telco services are in edge computing, moving data and computation and storage closer to the data source, enhancing end user experience, limitless connectivity, decentralized operations, virtual reality, augmented reality, mixed reality, of course, and protection from cyber risk and identity theft down here. Cybersecurity always finds its way back in on the same thing. Over here, electronics, we can see advanced materials, printed electronics, immersive technologies, advanced packaging, miniaturized electronics, and embedded systems. So take a time to read through all this stuff and absorb just how amazing this industry grouping is, these 6 groups. Okay, so we're going to get back to the stocks. Remember, we can always come back to this particular opening chart to get into this whole story. So we got top market capitalization, return on equity. Of course, here's the COVID pandemic and all these slides right here, very small 2-month recession, and then we came exploding out. Lam Research would probably be a great example here. Lam blew up through 21 and 22. Now it's kind of coming down, cooling off. Still, though, by the way, higher return on equity than before COVID for ASML and Lam. So, and also you can see here a little bit of a turn up in Taiwan Semiconductor, Lam, and others recently. So there was a surge, of course, coming out of the COVID pandemic. Now we're stabilizing and actually turning up a bit. Over here, what can we see here? Again, little bit of a pop during the COVID pandemic. We're now over. Really, what's important is we're kind of turning up on this full story. Now, telco services, same kind of thing. You can see a kind of a turn up in 2024. So I would just tell you right now, if you look at the last little piece of time, we're not seeing anything but a rising, very softly rising return on equity framework for these three industries. All right, revenue forward 12 months. Look no further than Taiwan Semi, folks. I mean, it's just going up. ASML, same thing in Europe, going up. Applied Materials, no question about it, going up. Lam Research, really rocketing up. No question, all these things are doing quite well. Of course, down here, telco services, you see a lot different story. AT&T had basically lower than it was 10 years ago. Verizon, a little more stable pattern, but not really exciting. And then TMUS actually did some buying and merging during the COVID pandemic, looking a lot better. So take in mind, these are industries that you can look into. VSAT, number one. Telco equipment, number two. Telco services, number three. Okay, again, the reinvestment rate, we can see. Again, you'd like to see people investing back in their businesses. So you'd like the top names in these areas. TMUS down here in telecommunications services, Qualcomm over here, ASML over here. So reinvestment rates, an interesting subject and an interesting topic to find better stocks versus worse stocks. People not reinvesting in their business and not growing it properly. Also notice this is really value stock stuff. 10% versus 52%. So again, relative to growth, the missed tech is obviously the growth sector. These are obviously less telecom equipment, more growthy than the services. This is the least growthy. Okay, total debt charts. Did debt matter to these companies? In the case of Taiwan Semi, absolutely. In the case of Qualcomm, absolutely. In the case of Verizon, absolutely. So again, we can go through all of this stuff, and we should to use it, but I would probably focus on the reinvestment rate, the revenue growth rate, and the return on equity is the most important. The last one I'll skip is depreciation and amortization. Not a lot there for you. All right, let's get on to top stocks by the maximum number of analysts. First off, we've got a really nice chart of a lot of names here. Now, some of these names you've seen before and some of them haven't been seen before because this is the maximum number of analysts. So what we're looking for is a chart pattern like this one, VSAT. This is a name that you should know about because look at that chart pattern. Really, really nice. VSAT, keep that in mind. ATUS, another billion market cap stock that I don't know about, but it's looking excellent. So I would take this one and take a look at it. Other thing here is Band, ticker Band, small company, but recently looking a lot better. Now, these other names, my maximum number of analysts, aren't looking very good. You don't want these downward sloping earnings estimate revisions for a growth stock. So these three names are things I would look into. These five names I would not look into. By the way, this is Qorvo. And you can see here, it really got hammered. It used to be a great stock. It is coming back a little bit on this trend. Doesn't look as better than these four. So if I were to tell you, this four or these four, obviously these four are your names that you probably should pick up on. And obviously these four are the names you should not bother with. All right, net margin. Again, higher margins better than lower margins. Want the tops in these industries. But again, margins in chips are 12. In service equipment, very, very low. Some of them are actually negative. And over here, you've got services, some of them also negative, not looking very good. Obviously, you want profit margins that are positive. So come to this page for profit margins that are positive. All right, CapEx to depreciation. We'd like to see somebody building more CapEx than not. So again, a name I'm not familiar with this one, ACMR. Here's IPGP. And those are the names I would probably bother with over here. A lot of these things you're just not going to be aware of what these names are, SATS. So go ahead and look back, again, all the way up to this one to get these names. For example, SATS is EchoStar. That's what I can learn from this example. VSAT is Viasat, right? That's what you do. That's how you do it. All right, so let's go back to CapEx and depreciation, just to remind ourselves how to do that, and then move on to total debt to capital. Again, all these different names, you can go back to those first charts and use this structure. Finally, the Zacks Rank stuff. Interesting, Zacks Rank, just remind yourself the percentage change in the fiscal year, not the quarterly year. Forward estimate is really what drives the Zacks Rank. So we're looking for people who are getting higher upgrades to their estimate revisions. And here, again, miscellaneous technology, telco equipment, telco services. Want the top ones, guys. Cash flow yield. Anyone at the top of one of these lists is in better shape than the lower list. I wouldn't compare across these industries because they're so different in structure, but within these industries, you clearly have a breakdown that helps you out here. MKSI is obviously your best bet overall in this industry. Over here, CMTL, over here, SGBAF. Keep that in mind. Right, enterprise value to sales. Again, you'd like to see in a growth stock that they're already higher and being bought. So you want to see something that's moving up. And that's going to be your better bets on these types of stocks. So again, we've got a nice ranking, but again, here I would probably pay attention at least to the structure of post-COVID performances and look for something people are buying and raising the value of, because that's a forward look. So BMI would be a name I would look into. Okay, now just to finish up, we're going to take these industry groups and compare them on earnings pureness, capital expenditure, return on capital, and the price to sales. So these are just three of the industry groups. You can see how different they are. For example, earnings pureness here, this is the telco equipment groups. They really tanked for a while. They're paying out big dividends. Now they're back, not doing so much of that. Over here, capital expenditure, really missed tech is the story here. That is the chip companies. Look how different this is. The capital expenditure of the chip company is far more aggressive. That's the growth stock area. Obviously, this missed tech area is where you're going to find your best stocks based on this capital expenditure. Return on capital, same story. It's the missed tech stocks that look best. And finally, no doubt about it, the price to sales are higher on the growth stocks. So once again, here we learned 1, 2, 3. If you're going to learn something in this particular part 2 setting, you're going to want to be focusing on the miscellaneous technology stocks, not the telco services and equipment providers. There's always exceptions to the rule on a stock-specific basis, but at an industry level, there's unquestionable performance benefits for the miscellaneous tech sector. Okay, now we're going to get into earnings, liabilities, and the quick ratio. So again, folks, here it is. To no surprise, the miscellaneous tech sector earnings are doing far, far better than the other ones. However, if you're going to look at telco services, they, profitability has held up pretty well, and telco equipment's kind of a low profit provider. Again, you're hearing here your liabilities, a lot more debt on these big telco service providers because they have a lot of spending. They're big outfits. But again, what I'm noticing here is the growth in the basic miscellaneous tech industry. And of course, that is going to wrap it up for me today. Thanks for attending. And if you want to get a hold of these slides, and I hope you do, go ahead and call us at 866-794-6065. Send us an email at strategycall@zackspro.com or find us on the web at www.zackspro.com. So once again, I'll repeat this. Please give us a call at this number, 866-794-6065, or find us on the web at strategycall@zackspro.com. We also have a LinkedIn page and Twitter. Really, this is the information you should be bothered with. I hope you enjoyed this. Again, like I said, there's 2 parts of this. And I think the answer here is to stay in the mis tech sector and find the better stocks in it. That's what I would say. Thanks much.